Hello, everybody. Welcome back to the Blockware channel. Mitchell here. And in this video, we are going to provide some keen insights into the Bitcoin market. It's been a chaotic past couple of weeks. There's a lot of fear, uncertainty, and doubt online. There's a lot of negative sentiment. And is this justified? Where is it coming from? And what should we expect next in terms of Bitcoin price action? In this video, I'm going to show about a dozen different charts to provide some clarity on what's going on in the market. And if you enjoyed this content, make sure to like the video, subscribe to the channel, leave a comment down below, and if you find this helpful, share the video with a friend. So the first chart we're going to look at is simply the fear and greed index. So this gauges sentiment by looking at various sources online, seeing how people are discussing the market. Are they euphoric or are they fearful? And an interesting point to note, and this kind of sets the framework for the video, is the fear and greed index is lower now than it was at the bear market bottom in 2022. When Bitcoin was down 75%, it crashed from 69K to 16K. Right now, fear in the market is worse, according to the fear and greed index. Why is that the case? Well, I've got a few reasons why, and we're going to break each of these charts down. The first is realized cap hodl waves. And this is a pretty niche and granular on-chain metric. And so I'm going to try to make it as simple as possible. What we're looking at here is how much capital has entered the market within the past year. So the realized cap hodl waves measures how much on-chain value was added over any given time period. And on this chart, I've specifically segregated to only 1 year cohorts. So, for example, the lightest shade here, this is capital that's entered within the past 6 to 12 months. The next shade beneath that, this kind of, still lightish green, that's capital from the past 3 months to 6 months. And then it goes all the way down to capital from the past 24 hours. That's this really dark area down here. So capital that's entered within the past year. Now, at this point in time, what this tells us is about 75% of the capital in the Bitcoin network has entered within the past 12 months. So that would explain a lot of the fear within the market. People bought Bitcoin at 100K, 120, maybe 75K back in April. But more or less, people have bought Bitcoin around the current price because Bitcoin's more or less been trading sideways for the past year. Now, many of these market participants were expecting significant gains, right? Bitcoin did extremely well in 2023 and 2024. And so to be holding Bitcoin for a year or 6 months and people just haven't seen the returns they were expecting, that would explain a lot of the complaining on the timeline and a lot of the griping. Now, when we zoom out and look at this metric in the aggregate, I think it does tell a very interesting story that's also fairly bullish for Bitcoin over the long term. And it highlights something we've discussed a lot on this channel, which is the structural shift before and after the Bitcoin ETFs. The Bitcoin ETF started trading in January 2024. So if you look at this dashed line here, that's 2024. So the trend before 2024 is we would see a blow off top in the Bitcoin price every 4 years. And that would coincide with a blow off top here in the realized cap hodl waves. So simply put, during these Bitcoin bull markets with explosive price action, you also had a surge of capital entering the market. That makes sense. There's accelerating that price appreciation, right? You had a supply shock from the halving, plus tons of new capital entering the market, these 4 year adoption cycles causing these 4 year blow off tops. Now, conspicuously, what you would see is these realized cap hodl waves would draw down during the bear market. So you'd get this huge rush of adoption in 2013, 2017, 2021, a lot of capital entering the market within a very short period of time, right? You can see it nearly reached 95 to 100% of the capital attributed to Bitcoin had happened within 12 months of these blow off tops. But what we've seen after the ETF is noticeably different. We've seen just a consistent gradual increase in this metric. So a lot of capital has come within the past 12 months, but this was also the case a year and a half ago, right after the ETF was launched. And we're not seeing these drastic drawdowns. So what this is telling us is there is consistent capital inflow. Unlike Bitcoin bull markets of past with the blow off top where you had just a giant burst of capital into the market. Now it's capital is consistently coming. It may not be as explosive in volume or quantity as it was during the previous Bitcoin halving epochs, but it's far more consistent and regular. Now, you do see spikes, right? If you really break it down to these darker area shades down here, you can see on the 24-hour or the 1 week, 1 month cohort, in this aligns with increases in the Bitcoin price, right? You see a spike in these darker HODL waves, um, aligning with the Q1 run of 2024 when Bitcoin went from about 30, 40K to making a new high of 74K. You saw this again last year after the election. Donald Trump won. Bitcoin got catalyzed from about 65K to $100,000 over the course of a month. And this aligns with a big increase in the amount of capital entering the market over that kind of 1 to 3 month period. So you do see some correlation, but when you look at the entire 1 year HODL wave here, it's been gradually up and to the right, which is very interesting to see. We're not seeing this massive pullback, right, where a bunch of capital enters the market at once and then it stops and it's kind of crickets after that. It's been consistent inflows, and that makes sense when you think about how much Bitcoin is being sold, which we'll look at another chart breaking that down later in the video. The next chart that I think explains a lot of the fear on the timeline is unrealized losses. So, how much did you pay for Bitcoin relative to what the current price is? This is not on a percentage basis, and this isn't subtracting for unrealized gains. There's still a lot of unrealized gains within the market. Of course, people have been buying and holding Bitcoin for the past 15 years. If you bought Bitcoin at any point, 14 years or longer, you're sitting on unrealized gains. But when we look at the dollarized amount of unrealized losses, we're now sitting at about 150 billion, which is the most since 2022. So if you think about it this way, if someone bought Bitcoin at $10 and it dropped to $7, that's a 30% decline. But they only lost $3. Versus if you bought Bitcoin at $100,000 and it dropped to $70,000, that's a 30% decline, but you lost $30,000. And so the person who lost $30,000 is probably going to make much bigger fuss online than the person who lost $3. Now, this is a very simplistic example, but when you extrapolate this out to the entire market, it starts to put it into context. Like, yeah, there's a lot of money, quote unquote, being lost, right? You don't actually lose the dollars unless you sell. Also, buying and holding Bitcoin, as many people, myself included, believe, that is the real taking profits. That is opting out. One Bitcoin is one Bitcoin. But many of the newer market participants don't necessarily see the world or see the market through that same framework. So it makes sense. You've got $150 billion in paper losses. You're going to have some people that are making quite a stir online about that. That can definitely attribute to the negative sentiment we're seeing right now. And another chart that tells a very similar story is the percent of supply in profit. So inversely, it's going to be the percent of supply at a loss, about 35% right now. This is the most post ETF, and this is the most since about 2023. Not quite near the 50% of supply being in loss, as which was the case in 2022, 2018, and 2015. So on a percentage basis, though, still looking at a pretty good sizable chunk of the UTXOs on the network are trading at a loss. That explains a lot of the negative sentiment. And then the last chart, simply looking at the monthly candles, this is a 20K red monthly candle. That's the second largest in history, past May of 2021, when the Chinese banned Bitcoin mining. Got a pretty large red candle there. But in nominal terms, this is one of Bitcoin's most disastrous months ever. Now, I mentioned earlier that long-term holders are selling coins. There's been a lot of Bitcoin that hit the market recently. And when you think about the inverse of that, well, someone had to buy that Bitcoin. And so looking at this chart, I'm very bullish. So on three separate instances over the past roughly 2 years, since 2024, after the ETFs were created, we've had three different instances where more than 200,000 Bitcoin were sold at the peak. So this chart here in black, we have the Bitcoin price. In orange, we have the long-term holder supply. So Bitcoin that hasn't moved within the past 155 days or more. And then in the red, we have the 30-day change to the downside. In the green, we have the 30-day change to the upside. So you can see in 2017 when Bitcoin was making its bull run, you had a lot of long-term holders selling into that market. That ultimately, that supply hitting the market would lead to the price going down. In 2021, similar situation. At the peak, you're looking at 750,000 Bitcoin that were sold during that time period. That's a lot of Bitcoin. And what happened? Well, the market was not able to absorb all of that. We end up crashing from 69K to 16K. Same thing back in 2017, right? A lot of Bitcoin hitting the market. You crashed from 20K all the way down to 3K. Now, we haven't seen that potent of a drawdown despite quite a large amount of Bitcoin hitting the market. Now, in Bitcoin terms, right, fewer actual BTC are being sold, but when you dollarize this, we're looking at billions and billions and billions of dollars being sold into the market, and Bitcoin's only down 30%. It may seem crazy because of all the negative sentiment, which the reason for that we highlighted in these previous charts, but the fact that Bitcoin's only down 30%, that's pretty bullish in my opinion, considering this is the third wave here where we've just seen quite a dumping of supply by long-term holders. Now, I use the word long-term holders loosely because this can be someone that bought Bitcoin 7 months ago, or it can be someone that bought it 7 years ago. In the last video on this channel, we broke those cohorts down a little more granularly. So this is a very high level framework. It's not, 2012 Bitcoin OGs selling their coins as much as it is people that bought Bitcoin 4 or 5 years ago, but I digress. The next chart I want to look at here, and this is shifting lens from Bitcoin on chain to taking more of a macro approach to the market. We're looking at the yield spread between the 10-year treasury yield and the 3-month treasury yield. And typically, this is a good indicator of risk on in the market versus risk off. And I'll try to explain it as simply as I can. When the market is fearful, they buy treasury bonds. The 10-year US treasury is deemed the risk-free rate, right? And so when the market is shifting to risk off, you see the yield spread start to drop. So investors buy the 10-year bond. The 10-year bond yield comes down because of investors buying it. Inverse correlation between bond prices and bond yields. And so then the spread between the 10-year and the 3-month yield drops as investors switch to risk off. Now, inversely, when there's risk on, like you see here in 2007, 2008, and again 2020 to 2021, 2024, when the yield curve here is steepening, when it's increasing, that's because investors are turning to risk on. They're selling the safe haven asset, the 10-year treasury, and they're buying equities, they're buying Bitcoin, they're buying higher risk assets. That's reflected in investors selling the bonds and the yields rising, and then the yield spread here rising. And, you know, many people are disappointed with 2025 price action because they expected 2025 to be a risk on year. The yield curve started steepening in 2024. We were expecting a lot of rate cuts. We were expecting President Trump to come in and stimulate the economy and the markets. That hasn't quite happened. At the start of his administration, it was all about Doge and cutting spending on the federal level. And right, that does trickle into the economy to some degree. It was also about the tariffs. And, this is not stuff that the market was exactly getting excited about. And so what many expected to be a risk on year ultimately turned into somewhat of a risk off year. And you can see that again if you just look at the price of gold, quote unquote safe haven asset. Gold's up 57% per year, definitely signaling risk off. Even long-term treasury bonds, if you look at the TLT, which is the long-term bond ETF, it's up about 3% per year. And this is actually the first positive year for the TLT in quite some time. So if we just look at the 12-month candles, bonds had 1, 2, 3, 4 consecutive red years. Now they had a green year this year, certainly a sign of risk off. So that's one thing we want to keep in mind from a macro standpoint. Bitcoin has been in a risk off environment all year long, but we may be shifting back to a risk on environment. And why do I say that? I say this for a couple of reasons. One chart I'm looking at here, this is the bond volatility index move, and then the equity volatility index, the VIX. And over the past month or so, these have been increasing in tandem. Now, This tends to happen in precedence of some kind of major break or liquidity crunch in the market. You start to see everything become more volatile, equities and bonds. We're starting to see that over the past, call it month, and throughout the month of November, these volatility indices have been moving higher in tandem. We saw that earlier this year into March and into April, which were also the bottoms in the Bitcoin market. This chart, now I'm not saying we're going to get a 2020 COVID style like liquidity crisis, but it's similar movement in these indices as to what we saw leading up to that. So this is the same chart, but we're looking at early 2020 going into March. You had, this trend of the equity and bond volatility indices increasing, the markets were becoming more volatile, ultimately leading to quite the liquidity crisis in March of 2020. Now, additionally, risk on would be a new Fed chair. Jerome Powell has been very hawkish and resilient and resistant to cutting rates. You can debate the reasons why, if it's truly because he believes that's optimal for the economy or because he cares more about his personal legacy and trying to make it about him being hawkish rather than money printer go burr memes. I tend to think it's more about the latter, but we'll never know. Regardless, this is why you shouldn't have humans in control of monetary policy. You should have programmatic code like Bitcoin in control of monetary policy. Nevertheless, we're looking at possibly having a new Fed chairman next year. It's at this point, it's almost a certainty. And this tweet from British Hodl talks about who the front runner for the new Fed chair is, this guy named Kevin Hassett. And apparently he's Trump's pick. He served as an advisor to Coinbase, so you can only imagine what his personal incentive for the market might be. I'm sure he holds a significant amount of Bitcoin or IBIT, likely in his case. He's also dovish, pro-growth, pro-easy money. There's almost a certainty at some point in 2026 we're going to get someone like this into the Fed chair. What's going to happen is rates are going to come down, risk is going to be on, and Bitcoin is going to be the asset that wins the most in that scenario. We've seen Bitcoin be this beacon of liquidity, this kind of canary in the coal mine. It reacts to liquidity, both to the upside and the downside, in the most volatile fashion of all major assets, more than equities, more than bonds, more than real estate, more than gold. And so, what can you do about this? What should you do about this? The last chart we're looking at here is how much it costs to mine a Bitcoin, because you can buy Bitcoin right now for about $90,000, and that's a pretty good discount, right? We're about 30% off the highs of 125. Or you can acquire Bitcoin through what I would call a discounted dollar cost average strategy. So that is what Bitcoin mining is. Instead of converting dollars to electricity, you're converting watts and computing power instead of converting dollars into Bitcoin, you're converting watts and computing power into Bitcoin. So you have a different exchange rate. And because of that, you're able to arbitrage. You're able to produce Bitcoin at a discount to the market price. And right now, if you run a Bitcoin miner hosted with Blockware at 7.2 cent per kilowatt hour, and you're using the next generation machine, which is the S21 XP, you're effectively buying Bitcoin every day at about $55,000 per coin. And on top of that, you can get a 100% tax deduction on your mining hardware. So if you spend $100,000 on miners, you can write off $100,000 of income legally for 2025. Now, you have to act quick because there are some stipulations for this. You can't just wait till December 31st to execute on this. You have to be able to show some material participation in the business. But at the time of this video, November 25th, you have enough time to execute on that, but you got to act fast. So make sure to go to blockwaresolutions.com and fill out the form there. We'll be able to get you help out. We will be able to help you out and get you started mining. And lastly, another reason to act fast, we are running the promotion of the year. This will be our last promo all year long. You can get that discounted rate of 7.2 cent per kilowatt hour. So if you want to buy Bitcoin at 55K, you got to have a 7.2 cent per kilowatt hour electricity rate. Typically, we offer 7.5, so this is a nice discount there. Plus, you can get $100 off every Bitcoin miner available through Blockware. This is for a limited time only through Cyber Monday. Click the link in the description. You could go to mining.blockwaresolutions.com/info to learn more. Bitcoin mining is a great way to consistently increase your Bitcoin position while also receiving major tax benefits. Again, that's mining.blockwaresolutions.com bitcoin.com/info. If you found this video helpful and if you're bullish on Bitcoin, make sure to give it a thumbs up, leave a comment down below, and subscribe to the channel. Thanks for watching.